Good afternoon. Thank you for being here, Brendan.
Thank you, Chunzi.
I guess let's start with, how do bond issuances help boost returns for OMERS investments?
Sure. Maybe I'll do a quick introduction about the OMERS pension plan. We are a member of the Maple 8. We are one of Canada's largest defined benefit pension plans. We are the exclusive pension provider for municipal employees in the province of Ontario. We have about 600,000 members who are members of the pension plan, and we invest across the globe about $140 billion worth of assets. And what we are as a debt issuer, we're in the SSA space, and we will issue at a AAA rate and compare that, use that to lower the cost of capital to invest in assets like infrastructure and real estate, private credit, and some such across the globe. And so the way it enhances our returns is exactly because of that spread. We're borrowing at a AAA rate. We're investing at our long-term return across the entire pension plan is about 7%. And so we earn that spread through the lower cost of capital.
When you decide which currency to issue debt in, are you looking at this, do you swap everything back, or do you try to match your debt with assets in the region? Yeah,
there are three things that are going to trigger us to be issuing debt. Principally, it is where are our investment teams able to find opportunities to deploy? And that is typically in the US and in Europe and in Australia. Those are the three currencies that we're focused on now as a debt issuance program, and we have assets in each of those currencies right now. So we keep it in those currencies to deploy in those currencies and to achieve the natural hedge. We'll also, of course, issue to refinance, and more we will use it as a tool, as I said before, just to keep that natural hedge, even if we don't have immediate deployment plans on that.
Are you programmatic in any of those currencies?
We are programmatic in US dollars. So the program started in 2019, and from day one, when we were meeting investors before that in 2018, our commitment was to investors that you would expect us to do a benchmark issuance in the spring of every year in US dollars, typically in the 3 to 5 year range. We have been true to that, and we continue to expect to be true to that every year US dollar benchmark. Euros will be a little bit less frequently, Australian dollars even a little bit less than that, but those will remain our core focus for the next number of years.
What will bring you back to the Canadian market? Do you have a more direct line of sight with Canadian investors?
Yeah, we've gotten that question, certainly with Canadian investors, if they're interested in something other than Canadian dollars. The truth is, as a Canadian pension plan, our contributions are in Canadian dollars. This is from the members and the employers. More than that, many of our mature cash yielding assets are paying us Canadian dollars, and so we have cash inflow that way. A lot of our existing liquidity that we have in liquid assets is also in Canadian dollars, so we don't have a natural need for additional Canadian dollars. And then if you consider the fact that we limit our leverage, today it's limited to 10% of the plan's net assets, and we don't really need the Canadian dollars from a natural hedge standpoint, it's unlikely. Things can change, but it's unlikely that Canadian dollars will make itself into the top three currencies we focus on.
What are you hearing from investors about what their priorities are at the moment, and how do you tap into that?
Yeah, I mean, even as I met with investors one-on-one this morning, uncertainty came up a lot. So I think their priority is certainty. OMERS itself cannot provide that to them. But what we can provide, of course, is that AAA rating with what we consider a very fair spread. And I think the interesting point that we've heard, especially in the last 6 to 9 months, is yes, we are a Canadian issuer. That is, we are Canadian domiciled with a Canadian mandate, Canadian members, and everything comes back into Canadian dollars. But distinguish our Canadianness from some of the other provinces where the balance sheet that we've got that is backing these bonds is truly global. So about 20% of our assets are in Canada, about half of them are in the US, another 15 to 20% are in Europe, and then there's Australia and some other pockets of the globe there as well. So when we express that to investors, they find a real appreciation in that, the diversity of the balance sheet that they're getting through participating in our term note program.
As a Canadian SSA issuer who mostly raises funds in overseas markets,
yes.
How do you pick which banks to work with?
Great question. We are looking to partner with banks who are also investor focused in the way that we are. What that means is they've got a demonstrated ability in the primary market. They know where the investors are who are interested in the currency and the tenor that we're looking for. They help us from an investor relations standpoint, so they help us stay in front of investors who are familiar with us or who have met us but not yet had us approved. Or, really importantly, as the program grows, they introduce us to new investors who might not know about the Canadian pension space and our use for term notes, and we are able to explain the story and help convince them to participate in the next term note. And the third thing we look at when we're picking our banks is their secondary performance. How much are they trading the bonds that are already out there? Where are they marketing them? How are they able to explain the fair values that they've got them at? And are they moving our paper around? Because that's also a good investor focus as well, to make sure there is enough liquidity in the secondary market for any bonds that we put out there.
So you don't have any particular commitment to Canadian banks?
We do not have any particular commitment to Canadian banks, but I will say we always will look at the Canadian banks first. Nobody gets a right as of a Canadian necessarily. They have to demonstrate all of those capabilities. They have to earn that for sure. But all of the Canadian banks have demonstrated that they're able to do that. And all of the Canadian banks have been on our mandates in the past 6 years.
Great. How's demand for ESG labels changing? I think you last issued sustainable bonds in 2022.
Correct.
Will you sell again?
So we have a sustainable bond framework that we keep current. We annually report against the bonds that you mentioned that we issued in 2022. When we look in the space generally, we do see continued pockets of real investor interest in a labeled bond, sustainable, green, social, what have you. And so we're going to continue to watch that space. We're going to continue to keep our framework up to date. We as an investor continue to maintain a sustainable investing policy. And so absolutely in the future, I would say it's an intention somewhere to keep that going, but I do not have definitive plans at this point.
And are investors asking for it?
Do you know, candidly, as we've been on the road over the last 2 years, the conversation has shifted a little bit more to us as a sustainable investor and away from a specifically sustainable labeled bond. And I think that's, you could have a good conversation around the path that's gone. As I say, 2 or 3 years ago, it used to be, is the bond itself sustainable? Now it is, OMERS, who are you as a sustainable investor? I think there's a sign of maturity in that evolution of the conversation.
I see. So it's not the priorities have shifted, it's how you demonstrate your commitment.
I think it's how we demonstrate our commitment in a more fulsome sort of way. Labeling a bond is something, us as an investor is something more.
Will you issue in British pound anytime soon?
Good question. We are approved to issue in the British pound. When you go back to what I said earlier in the conversation, some of the triggers for what we issue, one of that would be deployment. And so I think it is feasible that if our real estate teams or infrastructure teams or some of our other investing teams find a very compelling opportunity in British pounds, and that our treasury team looks and says we can maybe fund this through cash on hand, but maybe we want to adopt some leverage, for sure. And personally, I mean, it's not about personally, I think it would be a lot of fun to try and issue a pound bond issuance.
Are you talking to investors there already?
No, we go to London, and when we go to London, it's usually focused on the 3 currencies I've mentioned. Pounds haven't really come up. We've not gone to Ireland or Scotland or anywhere else that way, not yet. You've been in Asia a lot, though. We have been in Asia, yes. Our focus in Asia is partly Australian dollars. We did an inaugural Australian dollar issuance about a year ago, and there was good Asian participation there. And of course, US dollars continue to be a focus for Asian investors as well. So to the extent we keep going back once or twice a year, I think those 2 currencies will be at the top of mind. You own 48% of Bruce Power. Yep. And last month, we saw a Bruce Power Generation Infrastructure Trust come out with a $1.5 billion issuance. Yep. Can you talk about, for an organization like OMERS, how do you decide whether to issue at the plan level or the company level? I can talk about the parameters that exist around that. And so I mentioned before, we limit our top of the house leverage, also called our recourse leverage. Today, our investment risk policy limits that to 10% of the plan's net assets. Our credit rating agencies consider that when they award us the ratings that they've awarded us, et cetera. And so at the very top of the house, we're going to make sure that we're using it for those purposes of deploying into the currencies where we find investing opportunities, achieving the natural hedge, also complementing the commercial paper program that we have as well, where we have a $5 billion program that can issue across these currencies. and we'll take it out of that short-dated floating and put it onto the fixed-rate funding. And that is managed at the top of the house with our top of the house treasury team as well. The investment business units then have their mandates and their responsibilities at the asset-specific level to determine the optimal capital structure for any particular investment and determine the best way to execute that. And they're able to do things like you mentioned, that bond issuance from a few weeks ago.
So you don't have a hand, you don't have a heavy hand in that?
I personally, no. The programs are kept separate on that, yeah.
How has your hedging strategy evolved?
On the term notes, we've historically not hedged. We've historically kept them fixed and kept them in the currencies, as I said, that we raise them. A little bit more as we think about deploying, from an asset mix standpoint, OMERS is shifting more into fixed income. And as we do that, we want to make sure we're getting the best benefit of those fixed income investments through looking at the duration of the book overall. The term notes, of course, are contra to that. And so over the last few years, we have on occasion been hedging the rate exposure on the term notes to make sure that it's just the all-in spread that we're overall exposed to. That is not a rule that we do every time. That is something we decide in the moment, again, with our treasury and total portfolio management teams.
Do you work with other pension funds in terms of, when you want to enter a new market, or how much do you work together?
I would say the relationship amongst the Maple 8 in this term note issuance space is collaborative. I would say we all have our own objectives, our own programs, our own parameters, et cetera. I would say there are some who are out there leading, and there are some who are fast followers. I'd characterize OMERS broadly as a fast follower and looking and seeing and benefiting from what some of our peers have done before us. I'd say, we have good connectivity and we compare notes after any particular transaction, but I wouldn't say there's a pre-meeting of all the pension plans before we enter into a new market. That is a lot more individual.
Yeah, well, comparing notes is helpful.
Yes.
Well, I think we're super efficient.
Very good. Okay, thank you very much.
Thank you so much. Thanks, Brendan.